Hey everyone, let's talk about market pip limits. What this means is the banks have certain limits in place set by regulators, set by the governments, etc., which ensure that they don't crash the market, for example. They can't just tank the market by 1,000 pips in a day. There has to be limits in order. And these limits are typically, you'll find that the market can move maximum 100 pips in one day. And then during that day, you'll find that with small pullbacks of 25 pips. Now for the week, the difference between the week's open and the week close is typically capped at around between 200 to 300 pips. Now it's important to know this because if you found yourself in a week and they've had 3 pushes up and they're above the market by over 300 pips, then you know that the reversal needs to come in just to close the week at a lower price.
Hey guys, in this module, we will talk about market pip limits. Now what that means is here I've highlighted each separate day and we can see the amount of pips that that day had from high to low or from low to high. Okay, and we can see typically on a typical day, you can see we had here 60 pips, 72 pips, 82 pips, 69 pips to the downside, 139 pips, 58 pips, 189 pips, 96 pips, 116 pips. So you can see on a typical day, there's a variety of pip sizes, whether it's a low volume day, having 50 pips for the day, or whether it's a high volume day. Now, for example, if we zoom into this section right here, this was, I believe, Tuesday. So we can see on Tuesday, we had a nice strong move to the upside, the real move. See the early manipulation, 7 a.m. manipulation, real move to the upside. Now, typically what you find is, when we talk about pip limits, is the banks have a limit by the regulators, by the central banks, by the governments, etc., where they are unable to move the market extreme amounts. They have to stay within their limits. And this move right here, 180, is quite a significant move for the day. If it was to catch this trade from low to high, it would have been approximately 170 pips. But if we consider the fact of spread, consider the fact of entries not being pinpoint perfect, you may have gotten a bit 20 pips late or 10 pips late. Consider all that considered. On an ideal trade, if you catch 50 pips on an ideal trade, it would be an excellent amount of pips to be catching. That's sort of the target we want to be looking at with most of our trades. So let's say we got in on the re-entry here. So let's say we missed the UK session, we got in on the US session. Ideally, we would have caught their 2-hour trade, potential their 100 pip move to the upside. Let's say we held the trade, we didn't close there, we came back down later that night, 96 pips there on a real move. So that's a very strong move. Typically, we are going to be looking at catching 50 pips per trade. So if you have a look at this area here, a slightly more quieter day, you can see the real move came immediately in one candle at 3 p.m. After, look at that 2 p.m. manipulation candle to the downside. Let's see how many pips this would have been. Approximately 65 pips. Okay, guys, you see that 65 pips there. So yeah, typically we want to aim to achieve 50 pips per trade. This is what I've found to be the average amount of pips you can catch in a day. You can catch more, but in typical scenarios when the market isn't moving too strong and your entries are not perfect pinpoint entries, you are still able to catch 50 pips from the market. If you can extract 50 pips from a market on a regular basis, your account is going to be healthy, growing healthy. And likewise, with the stop loss, we keep our stop loss at 40 pips. Just as we've seen, most of the market moves more than 40 pips. If you got the trade wrong, you don't want to lose 60 to 80 pips, for example. Rather, you can lose 40 pips and just accept the loss that you've lost that trade just because you got into the wrong direction, which is completely normal in trading. Again, in regards to loss, we're going to cover that more in the psychology aspect when we get to that module. right, guys? Now, as well as daily limits, we also have weekly limits on the chart. So if you have a look, let's look at USD CAD. How is it performing for this week? So here's Thursday, Wednesday, Tuesday, Monday. So because Monday started all the way down here. Let's see how many pips USD CAD is up right now. 100 pips. Can you see that? We got all the way nearly to 300. We got nearly to 300, but typically the weekly market pip limits is going to be between that 200 to 300 mark. Sometimes you'll notice the chart goes well into one direction, but then considering that the market weekly pip limit should be between 200 and 300, you know, if it's 400 pips out, you know that the market should start to retrace. Look for that midterm reversal, check the 3 moves, have they come, etc. So let's look at our strategy on this chart right now. I'm gonna get my highlighter and just make it a nice clear blue. There we go. So we got Thursday, Wednesday, Tuesday, Monday. See the manipulation, look at this manipulation, strong move. Manipulation very typically follows one direction throughout the whole day in a strong, big, strong block of candles. So look at that, we had the manipulation, we found its low, we found the low. Monday was stale because it was the bank holiday in America. We had a manipulation to the low, tested that low, then we had move 1, real move 1, real move 2, real move 3. Now we found a high and we're looking for a midterm reversal. We should expect this to be going down 3 folds. It may come up to test, or we'll look for that entry. Okay, guys, so we are expecting this to go to the downside tomorrow, but that's a trade that we will be sharing in this secret circle, guys. But yeah, guys, hope you guys understood market pip limits. Let's do a quick recap on another chart. Let's open up the euro. Let's open up USD CHF. Let's open up the USD CHF. Now let's have a look how many pips we dropped in today. A massive 128, 129 pips in a single day. That's a strong move. Again, let's have a look. Is it Thursday, Wednesday, Tuesday, Monday? Very similar outset. Look at that. Friday, manipulation down. Monday, quiet, but we could consider it move 1, move 2, move 3. We found its high. Massive drop to the downside as move 1. Now, another thing, regards to real moves, the real move, typically, you have to keep an eye out. It can sometimes be 3 moves like this, or this could be considered 2 moves. The UK session move and the US session move. So that's just something to keep in mind when you are analyzing. Just make sure that you understand sometimes when you get a strong move, 100 pips plus, it could be 2 moves in one. But that's something we'll cover on more of the day-to-day technical case studies. Okay, guys, as you can see, for the week, let's see what our pip limit is. We started the week down here. We are currently 70 pips for the week so far. So we still have more space to the downside, which the USD CHF can go. Okay. Now let's do one more example. Let's have a look at Euro USD this time. Euro USD. We can see, again, referring to our strategy, we're on Thursday right now, Wednesday, Tuesday, Monday. Monday manipulation high, manipulation, real move 1, real move 2, real move 3 in the night. Okay, sometimes you've got to be active on your feet and try and see what's happened, because anything can really happen, but you've got to be active, reactive, and stable. Okay, guys, now we'll move 1 to the upside. Move 1 to the upside, we can enter tomorrow now. We're looking for manipulation down, real move to the upside. And we've got plenty of space to the upside. As we can see, the week started here and it's currently at near enough. It's open, so we can see strong moves to upside potentially. There's enough space to give it 200 pips move. You can also double check any news, any fundamentals that can catalyze that can be used as a catalyst, as an excuse for the banks to make strong moves. Okay, guys? Hope you understood the market limits. I'm going to put up a diagram just showing you general overview. These are rough figures. They're not exact numbers. They're very rough figures. Just use it as a good estimate to enter and exit trades as and when you want.
So the daily limits are typically 100 pips, and the weekly limits are typically 300 pips difference from the week open to the week close. Just some background information that you can keep in mind. Now, your objective would be ideally to try and catch 50 pips per day. If you can catch 50 pips per day, that is the true trade. And then 50 pips per day, you can even be looking at 200, 250 for the week. That would be an excellent portfolio.